Ladies and gentlemen, good day and welcome to the Mech Projects Limited Q3 FY’25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sridhar John from Nirmal Bang Institutional Equities. Thank you, and over to you, ma'am.
On behalf of Nirmal Bang Institutional Equities, I would like to welcome you all to the Q3 FY’25 earnings call of Mech Projects Limited. The management today is represented by Mr. N. Nani Aravind, CFO of the company, and Mr. S.K. Ramaiah, Director of Business Development. I will now hand over to the management for their opening remarks, after which we will open up the floor for Q&A. Thank you, and over to you, sir.
Thank you, Teresajan. Good afternoon, everyone. I am Nani Aravind, CFO of the company. I have with me Mr. S.K. Ramaiah, Director of Business Development. I welcome you all to Quarter 3 FY’25 earnings call. The performance for Quarter 3 and 9 months for this financial year continued as per our set targets for the entire year. The reported total income for Quarter 3 financial year 24-25 is 1,347 crore against 1,115 crore in Quarter 3 FY’24, an increase of 21% year-on-year. EBITDA is 160 crore as against 141 crore, a growth of 13%. And PAT is 87 crore, which has grown 39% compared to 62 crore in Quarter 3 FY’24. EBITDA margin has decreased from 12.66% in Quarter 3 FY’24 to 11.87% in Q3 FY’25 due to increased overhead costs. PAT margin has gone up from 5.6% to 6.5% due to lower tax and increase of other income. Revenue mix for Quarter 3 FY’25 is as follows. Mechanical business has contributed 277 crores against 230 crore in Quarter 2 FY’24, showing an increase of 20% year-on-year. Civil business, including railways, water distribution, contributed 522 crore against 596 crore in Q3 FY’24, a decrease of 12%. O&M revenue are 481 crore against 260 crore in corresponding period last year, registering a growth of 85%. Electrical business 25 crore against 21 crore, increase of 19%. Mining business 34 crore against 0 in Q3 FY’24 during last year. Other income is 9 crore against 7 crore in Q3 FY’24. So during Quarter 3 of FY’25, the distribution between domestic business and international business is 95% and 5% respectively. Contribution from the power sector remained at 65%. Non-power sector contributed 35%. Similarly, the total reported income for 9 months of FY’25 stands at 3,409 crore against 2,922 crore in 9 months of FY’24, an increase of 17% year-on-year. EBITDA is 417 crore against 360 crore, a growth of 15%. PAT is 218 crore against 164 crore in 9 months of FY’24, a growth of 33% year-on-year. So on 9 months to 9 month basis, EBITDA margin has decreased from 12.45% in FY’24 to 12.22% in 9 months of FY’25 due to increase of overhead costs. PAT margin has gone up from 5.7% to 6.4% due to lower finance cost, lower tax expenses, and increase of other income. Revenue mix for 9 months, mechanical business has contributed 608 crore against 517 crore in 9 months FY’24, showing an increase of 18% year-on-year growth. Civil business, including railways, water distribution, contributed 1,459 crore against 1,586 crore in during last year, a decrease of 8% year-on-year. O&M revenues are 1,213 crore against 755 crore in corresponding period last year, registering a growth of 61%. Electrical business 42 crore versus against 47 crore, a decrease of 10% year-on-year. Mining business 60 crore against 0 during last year. Other income 28 crore against 17 crore of other income during last financial year. So during 9 months of FY’25, the distribution between domestic business and international business is 94% and 6% respectively. Contribution from the power sector remained at 62%. Non-power sector contributed 38%. With reference to the other financial parameters are concerned, net current days, excluding cash and cash equivalent, have increased from 147 days in Q2 to 155 days in Q3 due to delays in certification of the waterworks and delays in realization of receivables, resulted in increase in the current assets of the company. And on stabilization of MDO business from FY'25 and 26 onwards, we can expect a significant improvement in net working capital days. The gross debt and net debt remained controlled despite delays in certification of water bills and delays in realization of receivables. As on 31st December 2024, the gross debt is around 614 crore and the net debt stands at 141 crore. The debt equity ratio as on 31st December stands at 0.39 times. Order book status, so far in this financial year, the company has secured orders worth of 4,242 crore till December. The order backlog as on 31st December is around 57,915 crore. If we exclude 2 MDO, the unexecuted order book stands at 18,284 crore. We are actively pursuing upcoming tenders, targeting 3,000 crore in new orders by March 2025. Additionally, we have been declared as a L1 bidder for the 49 kilometers Deoghar bypass highway project in Jharkhand, valued around 973 crore under HAM, and we are awaiting for the issuance of LOA from NHA. So with reference to MDO business is concerned, we are making significant progress in our 2 MDO projects. At Kotre Basantapur KVP mining, we have achieved a key milestone with the State Forest Department release of 564 hectares of notified forest land in the month of July. Following the securing of tree felling permission in October, tree felling begin in December 24. We anticipate OB removal to commence in next month, March 25, with coal supply scheduled to start from April 25. The other MDO Kalyaneshwari Tasra project is gaining traction. We have completed equipment mobilization for initial mining and received environmental clearance for 3.5 million tons per annum washery on October 24. OB removal and coal production have been ongoing since January 24, with approximately 5.38 lakhs tons of coal excavated and dispatched to sale as of January 25. Although sale offtake is currently lower than the planned due to limited washery capacity outside, we are working to address this constraint and scale up production. Now I request Mr. Ramaya Garu to update on the development of business side.
Yeah, thanks Arvind for your update on the overall numbers and things. Thanks for our investor community. As I said, as Arvind has given his update, as far as the business side is there, the backlog of order which was 17,362 at the beginning of the year has gone up to 18,284 crores, upside of 5.3%, with overall addition of 4,242 crores, which has added up to the 3 quarters. And in this case, a few important things is the mechanical and ETC business has gone up by 7% from 6,422 crores to 6,857 crores. Civil backlog from 7,814 crores, 7,310 crores, a reduction of 6%. O&M, there is a huge uptick in that in terms of order booking. That is a positive indication from backlog of 2,197 crores to 3,228, about 47% more. Electrical, a modest decrease from 930 crores to 887 crores. Minus 4.6%. The overall order backlog has gone up by 5.3% from 17,362 crores to 18,284 crores. And the domestic business continues to drive the business substantially, more than 96%. And international operations recently, some mainly on the O&M and the maintenance jobs, we are now trying to catch up. That is the balance portion. Then power sector continues to drive the substantial business because of the huge surge in the opportunities which have been available both in the installation business, civil business as well as the O&M business. and then MDO has given an update about the overall position in terms of the present execution and the actions taken. Now, what we can say is that as the opportunity side, there is a positive thing in terms of the investments, particularly in the power sector. What I can give that is an important thing which is driving the business. What I can give an update on this is that BHEL has been ordered with substantial orders in both the EPC and the main plant works along with the civil works. That comes to almost 24,000 megawatts in the last 2 years. In the EPC business, they have taken about 81,680 crores, and the main plant installation, main plant works in the supply and installation, and then the civil works also, associated civil works, that is the main plant boiler and turbine, 55,302 crores. And L&T is also entering now. They are taking further interest to this one. They have taken 2 major jobs of 4,000 megawatts, and that is around 27,523 crores. And therefore, in that way, the overall ordering which has been done in the last 2 years is about 28,900 megawatts. In that, the major players are Adani Group has taken 6 projects, about 10,920 crores they have done the ordering. Haryana Generation Company Limited 800 megawatts, DVC 1,600 crores, and then recently the latest news is that they have taken a decision on the Raghunathpur for the boiler island of the work. That has come about 6,500 crores or something like that. And then Mahajan Co, this is also latest development, Koradi. They have taken forward the decision which was pending on the Koradi investments, 2 into 800 megawatt. Now that has come to 1,600 megawatt, and then they have ordered on BHEL for about 8,000 crores the main plant works. And then NTPC has substantially ordered on BHEL about 11,580 megawatts. Totally comes to 28,900 megawatt. In that, the EPC portion, as I explained to you, BHEL EP portion comes to 81,680 crores. Now, balance ordering has to be done in many places. Koradi, they have to order about 1,600 megawatts. Adani, because they are doing the packaging themselves in about 10,920 megawatts. They are doing in-house. Of course, there also the opportunity can be there in many of the civil work, mechanical works, coal handling, miscellaneous works, etc. Then NTPC, the recent bulk tender which has they awarded 2 to L&T and 1 to BHEL in Telangana, that is about 6,400 megawatts. That opportunity can be substantial. Now, Raghunathpur latest update about 6,000 crores which has been awarded on the, this is the latest yesterday's news to BHEL on the boiler island. That means they have split the entire EPC into 2 EPCs. One is the boiler island, another is the turbine island. On the boiler island, they have taken this job. And then the MPGCL and there are new projects which will be expected on the 8 sets also. Therefore, from the combined opportunities in the power sector, I would like to delve in the first instance. The main business interest for us is the installation business, civil and structural business for the main plant and wherever the balance of plant is there. We have measured out the total opportunity size about 27,250 crores. 27,250 crores. New projects which have been allotted about 13,560 megawatt. And then there is a recent development where in KSK Mahanadi, the NCLT project which was been gone for liquidation has been awarded to JSW. That is, there are existing 3 units are running, 3 into 600, and one more unit they are going to complete it. That is the 600 megawatt. And 2 more units they are going to change the configuration from 600 megawatt to 660 megawatt. These are the major things, and the other areas, yes, and the infrastructure side, government continues to be bullish in investments in railways, drinking water schemes, roads, and then metro projects, etc. Therefore, what we are focusing is that, the experience what we have gained in the drinking water, we want to expand the business because this drinking water scheme has been extended up to 2028, and the total investment may exceed about nearly from 3.6 lakh crores, it may go up to nearly 5 lakh crores. And it is expected, particularly in the southern states, Karnataka, Andhra Pradesh, Tamil Nadu, Kerala, and Maharashtra, a lot of investments are expected. And now with the experience what we have gained in the UP, where we have done substantial work for about 2,723 crores, about 1969 villages, the work is in progress and substantial work has been completed. That is a focus on that. And the O&M, what I can say is that we are very bullish on the O&M because one is that a lot of new projects are getting commissioned. In fact, last year the commissioning was expected about 6,000 and odd megawatts, and that will bound to go up to 8 to 10,000 megawatts in this year. And then if they maintain this pace, because the government's plan is to ramp up the capacity of the power plant installation from the existing 218 gigawatts to the 218,000 megawatts to nearly 3 lakh megawatts. That means 80,000 megawatts. And a lot of ordering is there and many players are coming with investments. JSPL is planning 2 projects, one in Orissa and then another in West Bengal. They have created in Salmone. Already yesterday the news is that they have been awarded. That is JSW Energy. Then JSPL, the sister group, is also planning 2 major plants in Orissa and also in Chhattisgarh. And then there are other players also expected. After all, the utilities also, many utilities are expected to make investments, including Coal India and many other public sector government undertakings in Uttaranchal is also planning 1320 megawatt for whatever requirements are there. Then Coal India, I said, they are planning investments in Orissa and Rajasthan in a joint venture basis. Therefore, we are very bullish on the power sector investment in the next 2 to 3 years, which the execution will go for another 4 to 5 years. It will throw up 2 major opportunities. One is the complete installation business, which will be available, which will be a major player. Another is the follow-up O&M jobs, which will come up as part of the new commissioning, which will take place every year, about 8,000 megawatts. And that is a substantial business opportunity. And that we have seen in the major orders we have taken recently in many O&M jobs. For example, the major O&M jobs what we have taken last year is the drinking water, about 681 crores as part of the commissioning operations which is going to take place. And then Meenakshi rehab and O&M job 685 crores. And then 951 crores for Talwandi 3 into 660 megawatts. Tuticorin 392 crores for 2 into 600 megawatt. Singareni 2 into 600 megawatt 343 crores. And there was a major job we have taken in Nigeria where we have done the commissioning of the captive power plant 139 crores. Then other jobs in for the JP group in Bara, then Udupi, Adani jobs we have taken about 100 crores, and JSPL Angul also we have taken co-lending of 66 crores. In all, this is how it adds up. Now, certain things which we have to factor in that. Mainly the election process which happened continuously state after state, it had some sort of a postponement of the ordering and also decision to call the tenders and all. There is another positive development which companies trying to foray into it. That is in trying to see how much we can make use of our best of our experience in terms of the complete installation, O&M, and then civil structural, and then material handling jobs, and then main plant works, etc. Particularly trying to balance the plant packages, because the NTPC has got plans to do the balance of plant packages, and we are working with BHL. Then other customers also making also Singareni, there is an opportunity is coming up. Koradi, I said about 2 into 10 megawatt, that also is coming up. and then there can be other opportunities. Therefore, balanced opportunities can throw up at least around 12 to 15,000 crores, more than 15,000 crores of opportunities. Then we have to see how to take that call. And then the other things, what we are doing it in the international market, the focus is more on the domestic market and the areas of railways. Yes, railways, particularly metro jobs. Metro jobs refers to the maintenance sheds. About 10,000 crores of opportunities are there, and we are already working in many such maintenance shops and railway workshops also. This is what I would like to say. Thank you very much.
So shall we begin with the question and answer session?
Yes, ma'am.
Sure. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Dhruv Bhatia from AUM Funds. Please go ahead.
Yes, hi. Am I audible?
Yes, sir.
So thank you for the presentation. My question is, sir, obviously the opportunity is very, very large. What you are pursuing, your order book already reflects that. But in terms of, execution, what are the challenges for you to grow much faster than the 20% sales growth that you have done? Because you have a massive order book. So if you can give us some guidance in terms of execution, also what we can expect next year and maybe in FY'27. Just focusing on FY'26 and 27, what is the internal target? What are the hindrances to grow much faster in terms of people, capex, materials, or working capital? If there are any constraints, and linked to that question is, what are the margins that you expect with higher and higher scale? Where should the margins stabilize, both across the non-MDO business and in the MDO business as well? Thank you.
So, thank you, sir. With reference to the scale of operation is concerned, last year we have touched almost 1,500 crore per quarter execution capacity. We may scale up this because of the number of new line of business we started, and O&M also there is operationally. We received more orders during the year. So we may touch, we can execute up to 1,800 to, even we can touch up to 2,000 crore of revenue. So the next year target for 26 and 27 guidance is that earlier we have committed that 7,500 we targeted for the 26 and 27 is around 9,500. Is including the MDO operation together. But there is a delay in terms of the starting of the projects in MDO. Most likely maybe 10% or 15% here and there probably will touch between 7,000 to 7,500 between we may touch in 26 and maybe around 9,000 we can touch in 27. So in terms of the profitability is concerned, the MDO business will give a more EBITDA margins once we reach the peak rated capacity, which we are expecting from FY'28 onwards. Till the time during the development phase, we may not expect that much of EBITDA increase in the overall margins. But regular business, we are choosy about picking the right orders and high profitable orders we are planning to execute. And O&M orders also we are going to increase. So the O&M, the EBITDA margin, maybe every year on year basis, maybe around 0.5 to next 2 to 3 years, maybe in the range of 1 to 1.5% range, we can expect to grow, sir.
Yeah, I will add a few things to what Arvind has said. The other thing what we are built upon right is on the capacities and the methodologies, what we can do to ramp up the revenue and also the growth. That is obviously comes from the capacities organization has built up over the years. In fact, one of the basic things is that the organization capacity, what we have seen is, which was around 32,000, including all the manpower, direct and indirect manpower, and also engineers, supervisors, and the contracting labor. Now it has gone up to 37,000. That itself shows that for the O&M in the last 6 months, we have ramped up the organization strength of both execution, operation maintenance, skilled people, engineers from total figure of 12 to 13,000 to 17,500. Therefore, that is because of the large pool of the piece rate workers and the skilled people we are having in our roles from our piece rate workers or contractors and other agencies and all. Second thing is that the organization has fairly gathered a lot of expertise in terms of site execution that they want to convert into high-end value jobs. That is mainly in conversion in the civil works, for example, end-to-end solution, civil, structural, mechanical, and then O&M. Therefore, we are perhaps next to L&T or some of the bigger companies which are not into this traditional, this type of business. We are perhaps the only player who can provide end-to-end solution from in the entire construction as a construction partner. That capacity is established in terms of physical capacities of say, mechanical was about 4 to 4.5 lakh tons. At one time we have demonstrated. And then in the concreting side, 2.5 to 3 lakh cubic meters, that is substantial. And when we have reached that type of capacities, when the new orders are expected, and each plant, suppose a 2 into 800 megawatt, 60 megawatt plant has got a capacity of 1,50,000, 40,000 tons. And then doing couple of jobs parallelly is not a challenge for us, which we have demonstrated earlier. And therefore, in that, not only that, in the infrastructure side also, a lot of expertise has been developed in the recent years. Sorry.
My question on the margins, will we expect for the next 2 years at least margins to be constant in the 12% range?
Sir,
See, there is one basic thing, change which has happened in the market. Why we are a little bit bullish on the market is that the O&M pie of the execution has gone up substantially in terms of the backlog by 50%, 47 to 50%. As we all know, O&M provides better EBITDA margins and all. Now, on the bullish trend in the main plant, power plant ordering, it is now demonstrated that a lot of order flowing is there, and then competition is little bit much more subdued now because of the historical reasons. And we are well equipped to handle that. And the realization of the average value has gone up by 20 to 30% in the last couple of years. And both in the mechanical works and the civil works and the O&M side. That is the main reason why perhaps Arvind is working on these figures, and in the coming years we should be able to show better margins.
What would be the margins you think going forward, just as an indication for the core business or the non-MDO business, and then what would be in MDO business over the next years, the margins?
Sir, MDO, our mining operations are progressing well, and we expect the segment to contribute around 2,000 crore to our top line by 2028. As we reach full operational capacity, the growth will further solidify our market position and support our overall revenue targets also. And we are actually targeting to annual growth of around 25 to 30% over next 4 to 5 years of top line. And the EBITDA margin right now we are at 12.2% average we are giving. So O&M division with margins exceeding 15% is a key contributor for the major increase in the O&M, the EBITDA margins. So looking forward, we are projecting an increase of EBITDA margin with 1 to 1.5% over next 3 to 4 years, as the mining revenues also will continue to grow along with and contribute to major top line. So both mixed together maybe 1.5% at the peak rated capacity we are expecting in next 2 to 3 years.
That's 1.5% per annum, or over 3 years it will be 1.5% higher?
Both together over a period of 2 to 3 years. When we reach the peak rated capacity, it will not happen immediately. It will year on year it will go, and when we reach the peak rated capacity, we expect another 1.5% jump in the EBITDA margin.
Yeah. One more thing you would have to add up is that since we are having a single establishment doing multi-area jobs in construction, particularly the civil works, the structural works and mechanical works, our overheads can come down reasonably. That will can contribute some better margins. And then O&M backlog and capacities is going up, and that will definitely add up also to the margins down the line. And the other trend is that the customer is now preferring outsourcing the O&M on a comprehensive basis. That brings a lot of value addition, not only in the private sector. Private sector they have started now. Public sector also has started. Many of the public sector companies also like KPCL, GMDC, and then other many companies are going to catch up because they don't want to increase their establishment, and this is a better option to work on that. And some of the private customers are further expanding the O&M profile into such a way that we take the entire responsibility because of the capacities and the performance what we demonstrated so far.
Thank you, sir. Thank you for answering my question.
Thank you. We take the next question from the line of Sitesh from Lucky Securities. Please go ahead.
Sir, any reason why, when you see your 9 months number and when you also see this quarter's number, the O&M in your revenue mix have risen quite substantially, and the growth is also, a bigger growth is coming from the O&M revenue itself. So why isn't that your operating margins are moving up? Why have you taken some orders in civil which are a lower margin order? What is the key reason, if you could tell us?
Sir, we are executing projects.
If you are saying that your margins are going to go up because of O&M, they should be visible now also, right?
Correct. I'll come to that, sir. See, the current last year, because of the general elections, and there were delays in terms of the realization of receivables, and moreover, there are new O&M orders we received during last year. We have taken up a lot of manpower onto the roles of the company, and so the conversion will happen slowly. Initially, we'll have more overheads in terms of the starting of the new projects. That is one reason. And UP Water Division, we are executing this project under Jal Jeevan Mission. Because of the general election, there was no fund allocation at that point of time, so there is delays in realization of these bills. And subsequently, Jal Jeevan Mission timelines has expired in the month of November. Again, there is no fund allocation for this project. So again, the department has not certified the lot of bills pending from their certification. So this resulted more overheads, and we are incurring working capital limits to utilize for the running the projects further. So that caused the more expenditure overheads increase in the current year, sir. Next year, once these O&M operations are stabilized, automatically the initial cost, whatever we incurred, is normalized, and we may improve the maybe Q4 onwards. There may be increase in the EBITDA margins compared to the Q3.
So you are saying, if I understand your answer correctly, you are saying costs associated with new projects have come in the P&L, but the corresponding revenue related to those new projects are yet to come in your P&L.
No. The corresponding revenue we received, but initially we have to startup costs will be there to start major overheads we have to incur to start up these works. We have to set up the site establishment and everything. So that incurs more cost in terms of the overheads is concerned. The revenues we realize, but this cost will be normalized during the subsequent quarters. In the initial period of starting of the operations, we will have to incur the more cost in mobilizing the resources.
What is the usual margin that you bid at for in the O&M contracts?
It ranges from case to case, sir. So depends on the scope of work and all. So it ranges from 15 to 20-21% is also there. Some cases we are having 21-20%, and on average we are getting 16 to 17% average.
Actually, there are two categories in this. One is a long-term O&M contract. There is a steady margin. Then short-term shutdown jobs, repair jobs, maintenance jobs, can get a better margin also. Because, customer is in a hurry to get the job done because of the shutdowns and all. There some opportunity cost is there. That is how the overall O&M pie, both the AMC and the short-term shutdown jobs can provide better margins. As I told in the main plant, in installation business, civil works, because of the competition is being reduced little bit and also the higher demand, the margin profile has gone up and that realization will come in coming years.
Okay. And sir, last on the order, or let's say the order visibility available in the power sector. So you guys gave a lot big analysis, but if I have to shorten it and understand, how much of the orders for BTG which have been given out to BHEL by various utility companies, out of that order, how much order is yet to be ordered out for the main plant erection and the balance of plant? If you see,
I am taking out I gave overall figures of what the BHEL order has taken in the last 1.5-2 years.
That is about 29,000 megawatt, right? What you said?
9,000 megawatt, roughly it comes to nearly almost 1,40,000 crores. Okay. Then L&T has taken recently 27,523 crores. Therefore, all these things will come. Of course, a few orders have been getting converted and all, but bulk of the orders have to be converted, and this year and next year, major ordering will happen. That's what I gave a figure of. The total opportunity size and the ETC civil packages for the balance ordering to be done by, out of these things, about 27,000 to 30,000 crores will be there. This is on the orders already placed by BHEL on BHEL and L&T. Then there will be another 13,560 megawatts of new ordering has to be done by the utilities, by various utilities. They have to place the order because the urgency of doing it is very important to ramp up the capacity to by 80,000 megawatts by 2030-32. From the present 220,000 megawatts to 3 lakh megawatts. That is also, there will be better margins which will come because of the increased demand. As you know, the demand goes up, the margins also slightly can go up also.
So basically, simple to understand, out of whatever is ordered with BHEL plus NTPC put together, the main plant erection worth 27,000, balance of plant worth 15,000 are yet to be ordered out to various contractors like you. And over and above that, there will be new tenders for BTG or new tenders for power plants.
13,560 megawatts.
13,500 megawatt, which is yet to ordered out completely, correct?
Yeah.
Okay. Now, what you have a 50% market share in. So we, is there a change there in the BTG erection? And to the first participant's question, you never answered. Why is it that you have orders today in the non-MDO area, but when it comes to revenue execution, why is it slow?
No, the revenue execution, so that was mainly because the drinking water, there were certain fund allocation issues. That is where we had some shortfalls there. And then there were certain delays in this local that happens in some of the projects and all because of the engineering issues and clearances and all. That is also a factor. And when we are doing a lot of projects in the open area, there can be local issues on the land acquisition, clearances, approaches, and these are all to be there. And that is how there is some sort of this one. But even then, as Arvind said, with 3,380 crores, and then our figure was to exceed 5,000 crores revenue in this year. That we are confident of achieving it.
Okay.
Mr. Pritesh, does that answer your question, sir?
Yeah, ma'am. I'm done.
Thank
you.
The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, thanks for the opportunity. So, you outlined the opportunity size pretty well, but we have seen BHEL getting orders quite some time back. So when do you actually see BHEL tendering out and you being able to book these ETC or BOP orders implementing? Do you expect anything to come in fourth quarter? Or when should we start seeing the tendering happen from BHEL side, given that they themselves have a large order book?
For example, a couple of tenders, we are already bidding process is on. Unless it is extended, let us say it will take 1 to 2 months. Particularly BOP, Koradi tender is due, and that we are working with BHEL. And there is going to be Singareni tender also, 1 into 800 megawatt. That is also due, but first of all, BHEL has to get the order. And that is in the final process of they have given the offer and all, and perhaps that needs approval from the state government at the cabinet level. Then there can be other projects also which are expected there. That's why I gave a figure of 15,000 crores in the BOP. And then as far as the installation, civil and other opportunities what the BHEL has got, and even the L&T has got about 27,000 crores, what I said is that this should happen maximum in another 6 months to 9 months. Because including Adani, direct orders, BHEL main plant orders, and then balance of plant orders, whatever they are there, then L&T also, then all these things in various areas, main plant, balance of plant, coal handling, the civil works, structural works, piping works, etc. That is where, but in the worst situation, it is extended to 9 to 10 months. Because if they don't award all these things by end of the another 8 to 10 months, perhaps projects get delayed. That is what I can say. Sorry.
Understand. So let's say next year when you say that you will deliver close to 7,000 crore of revenues, what is the minimum ordering which you are looking at for this year at least?
Looking at the trends, of course, this election process is a continuous phenomenon. Many of the projects are located in these segments and all. And then perhaps, about 10,000 crores should be reasonable.
10,000 crores total ordering in this year?
No, next year.
Next year. Okay. Understand. And in this 18,000 crore order, we should assume that the same thing which you had mentioned in the last call, that the Adani orders which are not started are not going to be executed, right? Around 4,000 crore. That's the right assumption?
Sorry, FGD?
No, Mirzapur and...
Yeah, Mirzapur is, we are discussing it. Those Mirzapur,
Mahan.
then Kodarma,
Mahan.
and then Mahan stage 3. Stage 2, we are already executing. Stage 3, then Mirzapur new units, and then Amarkantak we have taken it, and they are also planning Kawai and all. Of course, Kawai, out of 4 units, 2 units may shift it to the projects in Madhya Pradesh. These are all to be expected.
So you're saying that 4,000 crore can still be executed, or they will not be executed?
Sorry, Anupam, can you repeat your question?
I'm saying the FGD orders which were there from Adani of 4,000 crore on which work had not started, will that happen or will not happen? What is the clarity on that as well?
As on today, except for that 900 crores which in Mundra they have taken out for the time being, we are executing this one Udupi project. Then other projects as on today, yes, it stands. Because one more development I can say is that Supreme Court recently has taken a very hard call in terms of that, they don't want to make compromise on the pollution. And some postponement can be there in the implementation of GD orders because there are other related issues in terms of the tariff adjustment and tariff compensation by the electricity boards and then DISCOMs. And that is one of the reasons which is little bit delaying all this implementation. Otherwise, in our opinion, I don't think they will compromise much on the FGD. It may take some more time.
Understand. And the next question is on the MDO. So let's say the revenues are obviously pretty volatile given that sales, the washery capacity clarity is not there. But broadly, if you look at, let's say, FY'26, what sort of revenues would you expect for the mining MDO from SAIL and CCL projects separately?
Maybe around in the range of 300 to 400 crore range, because this per month we are executing around 1 lakh tons in Tasra. We may execute from April, so that amounts to around 200 to 120 crore roughly we can execute for the next year. And the CCL also we may execute around 50 to 80 crore of revenue, 0.4 NTPS the initial capacity we have to execute. So together maybe 300 to 400 between we can execute the MDO business.
Okay. And your washery for which the groundbreaking had happened, what is the execution timeline for that?
See, by September 26 we have to complete the washery. We have already acquired all the required permissions and everything. So major equipment designs are also completed, and we have ordered, we have identified, finalized the vendors, and we have ordered some equipment also. So remaining are also under negotiation and discussion. Most likely ordering will happen in next 2 to 3 months.
Okay.
So the execution ground has already started. Yeah.
Okay. Okay, understand. That's all from my side. Thank you.
Thank you. We take the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, am I audible, sir?
Yes, sir.
Yeah, thank you very much, sir, for the opportunity. So just first time, I just wanted to understand the debt side. How are we looking to? I mean, in terms of debt, how do we look the outlook?
Sir, as of today, we are having a fund exposure of around 700 crore, 714 crore is utilization. And going forward, we are executing this capex requirement, the washery requirement in the Power Mech book. So there may be a requirement of around 700 to 750 crore capacity addition in next 2 years. So roughly by 28, we'll have roughly around 1,200 crore addition will happen in terms of capex is concerned. Term loans will be added to that, and working capital side maybe another 150 crore will be added to that. Okay. Because we are taking up the BOP EPC projects. So roughly maybe 1,800 to 2,000 crore roughly will touch by 28.
So 2,000 crores debt by FY'28. That's what we are looking at.
Yeah. Yes.
And which
is
currently
total capex. No, it's not debt. Sorry, it is a capex total. Debt will be around 500. Only we are adding to the capex 500 plus another, so around 800 will be added to that. 800 plus another 700, 1,500 to 1,600 will be roughly the debt number by 28.
So 1,500 to 1,600 crore debt by FY'28, right? And which is currently 600 crores, right? Gross debt.
Yeah, 714. Yeah.
740 crores debt right now, and it will be about 15 to 1,600 crores by FY'28. And this addition, I mean, each year it will be like 200, 300 crores. I mean, the addition will be on the phase manner, or will there be?
The capex requirement is roughly around 700, 750 crore. In that 240 we have equity, the QIP funds we raise. So 450 to 500 will be added in next 2 years. Plus the regular capex, the new orders we received, so around 100 crore every year, regular capex will be added to that.
Okay. So 750 crores is the capex for next 2 years. So out of that, 400 to 500 crores debt will be added in next 2 years, right?
Yes.
That's the right understanding.
Yes.
Okay. I got it. And in terms of execution, I mean, this year FY'26 we are looking at 7,000 to 7,500 crores kind of a revenue, right? FY'26. Yeah. Out of which, how much is coming from MDO in this year itself, FY'26?
FY'26 we are projecting maybe 300 to 400 between, depends on the momentum of the orders intake from the sales. So we are projecting 300 to 400 in between.
300 to 400. And you mentioned by FY28 optimally MDO can do 2,000 crores of revenue. And so at optimal levels, what sort of EBITDA margin one should look at in MDO? Is it close to 20%?
Both together, the average of 20 to 22% we can take up, sir. We have higher margins in Tasra and lower margin in KBP. Weighted average of around 20-22% you can take.
And this year, earlier we were targeting, I think, close to 5,500 crores of execution. Now, given the 9-month the execution that we have done, what would be our revised target for this year, FY25?
We may touch it this year around 5,000 to 5,200 between, sir, roughly. We are, as of 9 months, we have executed around 3,400 crore.
Correct.
We are short by 1,800 crore, and the water utility certifications are pending. Roughly around 200 crore works are there in the WAP. The certification happened, and another 1,600 to 1,700 crore we can execute in the Q3. Fourth quarter actually. For the both government and private sector clients are likely to expedite the certifications and payments. So we can able to touch at least 25% growth for the current year. So 5,200 crore we are targeting to reach.
How much? Last point I missed.
5,200 roughly.
5,200. So fourth quarter we are looking at 1,700 crores plus kind of execution, right?
Yes. Because already some certifications pending from water division, so that is already there 150. It was supposed to happen in Q3, but there is a delay in terms of certification because of the timelines expiry of Jal Jeevan Mission. So now the recent budget also has extended the timelines.
Correct.
So once they will do the certification, they will release the funds in April.
Okay. Understood. And in terms of order book accretion, we are looking at around 10,000 crores of order inflow in next year, FY26, right?
Right.
Okay. That clarifies, I think. That would be it from my side. All the way best to you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Manthan from Nexus Equities. Please go ahead.
Hello.
Am I audible?
Yes, sir.
So I think earlier we were targeting order inflows of around 10,000 crores to 12,000 crores for this fiscal year. So now till December, I think we have just received 4,200 crores of order. And what you said that we might receive another 3,000 crores of order in the remaining 3 months. So
973 crore we were in L1 in road projects, so we are waiting for that LOI, so that will also be added to that.
Okay, so overall, how much order inflows that we expect?
Between 7,000 to 8,000, sir.
So because earlier we were targeting something 10,000 to 12,000. So are there delays in orders bidding, or some orders will be spilled over to next fiscal year?
Actually, what happened was that, only the election process, another is some of the tenders got postponed, like the major BOP tenders. Singareni, it got postponed by 5 to 6 months. Then Koradi, it was the earlier project should be started long back, 6 months back or 8 months back. No wonder they have started some tendering work, and the main plot has been awarded. And then, there were some ordering itself on BHL and L&T, there were some delays by the utilities. And this is a major reason for that.
Okay. But, sir, then, so next year we are targeting order inflows of 10,000 crores roughly. Now, if I consider that 4,000 crores which were actually going to receive in FY'25 will be received in FY'26. So next year also incremental order will be just 6,000 crores. So the pace of order inflows is decreasing despite you being, despite BHEL having such a strong order book. You said that L&T is also having strong order book, even Adani also. Then why we can't target much aggressive order inflows? Because our order inflows has been stagnant since last 9 to 10 months.
No, I agree with you, but basically what we have to understand, there can be a time lag between taking decisions, and then some of the places, there is a engineering issues are there. More than that, there will layout issues, and then, basic approvals will be there. These are the things which generally delays it. Therefore, we have been doing well in certain big ticket items like, previous years. And of course, this year onwards, the big tickets, what we are hoping for the BOP, there is a postponement and all. That is where our optimism was making 10 to 12,000 crores earlier.
Okay. So for this year, as you said, the previous participant, that we are quite confident of achieving 5,000 crores to 5,200 crores of top line. Is that so? We stick to that.
Because we have demonstrated last year quarter also the capacity to execute.
Correct.
Fourth quarter, as I said, billing and the certification process will be better in the customer also because he wants to dispose of his funds and then bill it also, payment also.
See, the UP government is certifying the bills only when there is a fund available in the system. So they are holding the certification. So we are recognizing it as a WIP.
Okay.
When they allot the funds, they are certifying, and based on the certification, we are taking. So that way we are confident of getting the certification by March, and we can able to reach our target.
I'm here, Portugal.
Okay, so what you are saying is that 200 crores is just 200 crores of order revenue booking is just delayed because of certification. As soon as you receive the certificate, the 200 crores of order revenues will straight away come. Is that correct?
Yes.
Okay. And so since that we might need to borrow in the next 1 or 2 years, so we are as of now we are working on a PAT margin of roughly 6%. So we expect that our PAT margin will be 6%. Net 5.5% to 6%, or will that come down?
See, basically, the finance cost we are under control, and that's why we are able to manage the 6.5 to 6.8 level of PAT margins. Now, if the EBITDA margin is improved, then automatically this margin also will go up. So the main constraint is happening at this EBITDA margin level only. So as and when we get the order, the two profitable orders added to the portfolio, EBITDA will automatically go up, and our PAT margin also will go up.
Okay.
Year on year, we are well within the planned number, and compared to the previous numbers also, we have less finance cost. But going forward, if we go for because we are majorly new O&M orders we are executing, there is no working capital requirement for that. So only EPC project, if I bid, then I have to go for the more working capital, and my finance cost will be more. And if I add more capex to my balance sheet, then again I have to add more interest costs. So far we are managing well within that. So again, future depends on our growth pattern and BOP works. Probably we may have to incur more finance cost, and so the PAT levels will undergo a change.
Okay. And MDO revenues were 34 crores in this quarter, so which was like a significant jump from previous quarter. So can we expect such a QOQ jump on the MDO revenues, or is that some again in MDO revenues also H2 is heavier than H1? So how does it work for MDO orders?
Kasra project, actually, this ready platter readily available, so we started mining, because earlier some other MDO the promoter has done this excavation, and so we were readily available, and we are doing the building directly. So now we have to there is no appointed date we have not received so far, but sale is giving as and when the available quantity. It depends on the availability of the washery capacity outside. So from April onwards, we may get appointed date, and then it's a binding agreement between the sale and us for lifting the material as per the contractual terms. So based on that, we are hoping that every month we can raise a bill to sale as per the agreement conditions.
Okay. And of this X of MD order book of 17,000-18,000 crores, how much is slow moving, or these all are like executable in the next 2 to 3 years? This current 18,000 crores of order book X of MDA?
Except the FGD of 4,600 crore roughly will be the FGD orders non-moving. Rest of the order is running only 14,000 crore roughly. Right
so
now.
This 18,000 crores includes FGD slow moving order of 4,200 of Adani, correct?
Yes.
Okay. So that is 14,000 crores. In you plan to execute in next 1-2 years or 3 years, means this current order book?
Average you can take 2.5 years.
40%.
40% is the conversion ratio. Yeah.
Okay, fair enough. That's it from my side. Thanks.
Thank you. We take the next question from the line of Anush Mukashi from Yadna Academy. Please go ahead.
Hello.
Hello.
Am I audible, sir?
Yes, sir. Yes.
Thank you for the opportunity. So my question is about this recent development about nuclear energy mission. So just wanted to understand what benefits do Power Mech see from this, and basically, like, do Power Mech have the capability to develop these small modular reactors? And if not, like, would you consider entering into this segment?
That is a government initiative. Already, Jindal has started a joint venture. I think they are going to start, and then NTPC, then this one Nuclear Power Corporation, they have started a joint venture. Idea is to put 200 to 250 megawatt sets. Of course, they are all that has to be developed and all. Of course, we have recently taken a job of 550 crores in Kaiga for the main plant works and all. We are looking at it, but it is going to be a challenge because the technology is there, then the sourcing is there, and then a lot of aspects are there. But one good thing is that these plants will run lot of time, 30, 40 years, and it makes sense. And that we are just thinking. We have not taken any call so far.
Okay. And just one next question was, like you said, the 200 crores of revenue booking has been delayed to Q4. So is the cost also delayed? I mean, the cost booking is also delayed to Q4, or is it currently booked in Q3 only?
No, because when we recognize the WIP, it automatically comes into the revenue part, sir. So some back-to-back contractors are there in this project. So wherever the back-to-back contractors are there, the cost has not been booked and revenue has also not considered. Wherever direct execution is concerned, we have already recognized the WIP. For the balance portion, wherever back-to-back contractors are there, which for that we have not recognized both cost and revenue because we have not received the bills from the clients or subcontractors also.
Okay. Thank you. Thank you, sir. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Thanks for the opportunity. So just wanted your thought on the fact that recently Ambuja has come out with the tenders to operate their cement plants.
I'm sorry to interrupt, Mr. Jain. We are not able to hear you clearly, sir. Could you please increase the volume?
Yeah. So am I audible?
Yes, please go ahead.
Yeah. So just wanted to have your thoughts on the development that Ambuja has come out with the tenders for some of their cement plants to operate on MDO basis or on contract basis or outsourcing. So as we are looking to diversify into other sectors, so would we be pursuing that particular opportunity going forward?
So is this a captive consumption power plants which you are referring by the Abuja?
I'm talking about the entire cement plants.
Okay. So now we are pursuing with Dalmia Cement, Bihar and Andhra and Tamil Nadu also. They are actually planning to start the captive power plant, solar power plant and wind power plants. So there they want to join as the 26% partner and we will install the required megawatts of solar power plant and wind power plants, and we have to supply for 25 years of PPA. They will enter with the Dalmia. So the negotiations are going on. We have given our quotes for them. So we are waiting for their confirmation on that, sir. So there is a new solar business which we are actually looking at to start with. Future for entering into the green hydrogen business, we want to have this kind of experience requirement is there for the solar power. So in that plan, we are in touch with them, sir.
I was referring to to operating the entire cement plant. So like Adani has come out with the tenders like to operate their entire cement plant, some of their cement plants on a basis.
Right now we are into the oil refineries and the power plant O&M, but if that kind of work is there, probably we can also explore that opportunity and we will also look into that.
No, oil refineries is an option. BPCL is coming to 60,000 crore investment in Bina. Then HPCL is expanding it. We have got some experience. We have done some of the jobs in Reliance and other places also. Therefore, it is an option because the same expertise we have to deploy it and do the work. Only thing more stringent quality and safety issues will be there.
Okay. But do we have the potential, or are we looking to operate the entire cement plant, like the grinding, clinker making capacity, all that?
I think when we can operate a power plant which is highly sophisticated and that too with a control room operation, we have started working in some of the O&M plants in the NMDC and then JSPL for the steel plant and all. It is an option which you can explore it if we can get a reasonable returns on that. And there is going to be captive power plant in any cement plant, and then the kiln operation and the other auxiliaries and all. Those things, the skills which are required and all, only the operating characteristics, production characteristics, and then the various parameters in the cement plant, that we have to get used to it. And that can be, it is a question of taking a correct call and then going about it. And as on today, we are reasonably well satisfied with the O&M initiatives, whatever we have taken, and there continue to be more opportunities which will come up because of the annual capacity addition of 8 to 10,000 megawatts in the next 4 to 5 years.
Great. And lastly, sir, I'm not aware whether you have articulated about that, but on the Tasra mine, we have seen a very suboptimal operations from sale. So how confident are we to execute those orders in the coming times?
Sir, as of now, we have not received appointed date in Tasra project, so it's not a binding obligation at this moment from the sale also to lift the material. From April onwards, we are getting the appointed date. So then the contract clauses will kick in. So it is a binding on them to lift the material irrespective of the capacity is there or not outside. So so it's the contract is protecting our rights, so there is no problem in terms of achieving our targets for the next year.
Thanks a lot, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Yeah, thanks for your participation and the increased this for requirements we have brought out. It is a very interesting discussions we had. I think power sector is highly bullish, and infrastructure we are well established now. The drinking water, railways, roads, and other related projects, and then metro maintenance shops, etc. And naturally, business should look up with DHL getting bulk of the orders, and L&T is also coming up. And there are many new areas which will come up certainly. And this should we continue to be aggressive in our approach in both marketing and execution, exceeding 5,000 crores in this year, certainly. And then, coming year about 10,000 crores, as we said, that is looking at some of the UOP opportunities, which are major items. And then other non-power sector jobs which are established in railways, roads, and then material handling, coal handling, and then mindset development works, etc. Therefore, let us look into that way, and then as far as the capacity of the company is concerned, to augment the execution capacity, that is always there, and that we can do it. Thank you.
Thank you, members of the management. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.